Welcome to the Daily Update, where I'll go over the action in the market for Tuesday, November 28th, and then we'll see how things look for Wednesday, November 29th. We saw a little bit more action in Tuesday's session. We went up, we went down, but by the time we got finished, we pretty much had gone nowhere. So it was more of one of those treadmill days. We're still looking positive with our technicals. We look a little bit exhausted. It's a debate whether we're coming into some positive seasonality or a little short-term negative seasonality as the mutual funds go through their distribution process, which can gyrate the markets a little bit. On the negative side, it's like, how come we're not going up? We're having trouble breaking through upper resistance. On the positive side, well, we've had a pretty good run up and the market is not really selling into strength. So there's a couple of ways you can look at things. Let's go back and talk about what happened right at the open. We had a gap lower open, which technically would not be a gap. Usually if it's 0.5% or more, that's when I call it a gap. But because the pivot levels are so close to each other, it looked like a gap. Prices then continued to drop down below S1 at 45.44, but we didn't get all the way down to S2 at 45.38. So we set the low right below S1. Then we rebounded. We got back up to the unchanged level, and we were able to break through that. We got to the daily pivot at 45.52, up to R1 at 45.59. That's where we seem to be, at least we were dealing with some resistance at that level. But then we got up to R2 at 45.67. It looked like, okay, things are looking a little bit better. But then we declined back down to the unchanged level. Prices chopped above and below the unchanged level going into the close. And this had somewhat to do with some Fed speak that came out that I'll talk about here in a moment. We were up 0.1%, virtually unchanged again. And volume continues to be below average. It's picking up a little bit, but still, we're not seeing any real strong volume now. We are more positive in the short, intermediate, and long term. We're still overextended in the short and intermediate term. The long term seems to be improving, but there are some warning signs that I'll go through and talk about. And the big gyrating moments in Tuesday's session had to do with inflation and interest rates and what the Fed said. There were a couple of governors that came out, and one seemed to be more market friendly. The other one was less friendly, and that's why we saw the gyrating action in the market. We're keeping an eye on the geopolitical concerns, specifically Israel and what's happening there. And then we're going to get some big economic reports later in the week that might help give the market some direction. Some comments. Fed Governor Waller came out, who is an FOMC voter, and acknowledged that policy rates could be lowered if inflation continues to fall. This is the scenario that the market is trying to adapt to, or trying to adapt and adopt. And they do both at the same time, but it needs to go on for several more months. That's the higher for longer, keeping rates where they're at. Then later on, Fed Governor Bowman, who's also a voter, said that she would support raising rates again if data shows progress on inflation, that it is stalling out or is insufficient to bring inflation back down to 2%. When we saw the nice little run up, this is after Fed Governor Waller spoke. Then we saw prices coming back down. This is when Fed Governor Bowman spoke. Oil ended up closing down, or excuse me, it should be up. I forgot to change that to up. It was up to 76.44. We're still trying to decide, is oil really being influential in the market right now? It's kind of drifted away and is not as relevant. That is more tied to what's going on geopolitically. And because a lot of what's going on in Israel seems to be escaping the main part of the news cycle and other parts are replacing it, oil doesn't seem to have as much of an impact. On a short-term basis, we still have the 20-period exponential moving average, the Stochh RSI, Williams percent R, stochastics, the RSI based on 9 periods, the boom indicator, and the slope oscillator is starting to turn down now. Intermediate term, we have the PMO studies, the rate of change going back 20 periods, the Sean trend meter. The TTM squeeze finally dropped down, but I wanted to show that again. The NASDAQ 100 bullish percent index, that's still gyrating at an extreme positive level. The S&P 500 new highs, new low studies based on 10 periods, but some of the other things have fallen off of this list. We're still adopting and adapting this scenario that the Fed is keeping rates higher for longer. Now, the next part of that scenario is coming into play. Are they done raising rates? Well, according to Fed Governor Waller, maybe. Are they going to raise rates? According to Fed Governor Bauman, maybe. So that's part of the thing that goes back and forth. What's going to help us is keeping an eye on the economic reports as they are released. We also keep an eye on Israel oil to see if that becomes more of an influential factor in the market, and then earnings as each company releases them. The dollar was down slightly and interest rates were also down, and this helped give some support to stocks. We have the 10 to the 5, the 10 to the 2, the 10 to the 3 month, which those yield curves are still inverted. We were unchanged as far as sentiment. We're still positive. We came in at 65. Our trend is still positive. The ADX is above its moving average. They're both moving up. We're starting to get up to that 40 level with the ADX, and that's a bit more of a concern, but we're not quite there yet. But we are above the moving average, suggesting that it is a strengthening trend. With the update, our bias is positive and our momentum continues to be positive. Some economic reports that came out, we did get consumer confidence. It came in actually better than expected at 102, where they had expected it to come in at 100. Last time it was at 99.1. The FHFA Housing Price Index was up 0.6% month over month. Last time it was up 0.7%. The S&P Case-Shiller Home Price Index was up 3.9% month over month. That's less than the 4.1% they had expected, and a lot more than the 2.1% that we saw last time. Here are some charts just showing the FHFA housing prices. And this, it gets to the point where it's like, okay, people are already experiencing the idea that I might be able to sell my house, but when you buy a new house and then put a mortgage on that at a higher interest rate, now I suddenly can't do this. But for right now, the price of homes continues to go up. And then we look at the Case-Shiller Home Price Index, where it's also continuing to advance. Here's consumer confidence, where the blue line is the total, where it has been coming down, but we're still above that 100 level. The expectations looking out into the future are showing a little bit of an improvement, and the present is the purple line, where that's pretty much flat, but has been declining. We did close at 4.34% for the 10-year yield. That's still above the 4.02%. Here's the intraday chart, where we did come down to S1, and that was pretty much the low, and we set some support up right here before going back up above the unchanged level, the daily pivot. We broke above R1. We got up to R2. That's where we stalled out. Then things started to come back down. We broke down and went negative, came back down to S1. But then after this little gyration, we just chopped above and below the unchanged level and ended up closing slightly positive. Here's the intraday chart, where we were more negative before the market opened. And then after the open is when we saw the real thrust up and then the thrust back down. And we're looking fairly positive going into the initial overnight session. Value is still outperforming growth. This is another little concern, where value was positive, that's the red line, and the blue line, growth, that was negative on an intraday basis. We look at the growth to value ratio for the S&P, it also is underperforming. This is a little bit of a concern. We want to see this going up if we're going to have more confidence in the market actually going higher. Some end of day charts where both growth and value for the large caps were up, but growth was up less. And mid caps, growth was down more, and they were both down. And for the small caps, growth also underperformed value. And this is not necessarily encouraging right now. This is our end of day growth to value ratio for the S&P. It's continuing to decline. That's more shorter term. Longer term, we're still in an uptrend because the blue line's above the red line, but we have been chopping more or less sideways. When this really goes up with the index, we want to see growth to value going up with that, and that's just not happening. Keeping an eye on the trend, we are not necessarily close to getting 240 with our intermediate term trend, but we are showing that this is a strengthening trend. The green line did get close to 40 and it's starting to come down, but it's still on top. So we are positive with the trend. In the short term, this is where we're getting close to that 40 level. We're at 39.72. This is when we start to get extreme, meaning that the trend could be exhausting itself. And in a proper environment, which is what we're seeing, the short-term chart would generally tell us something before the intermediate-term chart. Volume is turning back up just a little bit, but we're still below average. Sentiment, we're still wondering if we're at this Latter part of November to early December with some choppiness with the VIX as the market works through some distribution issues, especially with mutual funds, before it then resumes going down. At least that's what happens on a historical basis. The Ulster Index is still suggesting there's not a lot of fear in the market. The VIX ticked up, is kind of flat to slightly higher with the line chart, and we did spike up as we were going down on the bar chart, but then we closed well off of that. Volatility is picking up just a little bit with the VIX of the VIX, where it's going back up, but we're below the moving averages, and it's still pretty low when you take it all together. We're still going down with the VIX to VVIX ratio. That is longer term positive. We're also declining with the VIX to the 3-month average of the VIX. That's longer term positive. The VIX to move ratio is still very low, showing that there's not an awful lot of volatility for stocks. This was finally updated. I couldn't update this in yesterday's video. Apparently they took an extra day, holiday, vacation or something. But the equity put call ratio did decline a little bit. It actually went up in Monday's session and then came back down. And this is acting a little bit strange right now. And it's a little discouraging when we look at our 5 period, because we're now back above this extreme level and we could be getting ready to spike again. Now that could be positive, but we were kind of latching, at least I was latching onto this spike here and then this decline. Well, now that it's going back up, we're extreme and it may spike again. And we chopped above and below this extreme level for quite a while, and it kind of danced us around as the market really was having a difficult time trending. So we're going to continue to watch this. At some point, if it tops out and starts to come down, that could end up being positive for the market. Right now, the fact that this is going up, we're kind of going with that since it is going up, that is more negative. And then keeping an eye on the longer term chart. And we can chop around here and get more than one signal before the market finally decides what it wants to do. We're starting to, it's really hard to see, but we had been coming down with the 253 simple period moving average. 253 simple moving average. Then we are just barely starting to turn back up now as the daily version of the equity put call ratio is kind of gyrating around. But when we look at this fear gauge, it continues to show that fear is really decreasing. This other fear gauge ticked up just a little bit. So we're getting some cross signals here. The risk on to risk off ratio, it was up slightly, but we still are declining longer term. We want to see this really going up, and it's just not doing that right now. But when we look at our advanced decline line studies based on price and volume, yeah, we were pretty much sideways, but we're still above the moving average. But what is holding up, even though they're declining with the new highs, we're not really seeing any new lows here. And so that's really helping our 5 period and our 10 period to go higher. The advanced decline ratio is still positive, even though it is declining. It's positive because it's above 0. Accumulation distribution is kind of flattening out, but it's above an advancing moving average. And this is something that was giving us it's a little bit of a concern, where we're getting a really high reading with the Chaikin money flow, another smart money indicator. It's starting to come back down, but it has been really climbing up here. The red line is still going up, but if this keeps falling, we're going to see the red line start to turn down. Looking at the NYSE cumulative advanced decline line, we had a slightly positive day, so it was up. We did decline on a closing basis. We were pretty much flat from Monday's session. We're above the trend line, and we're coming back above the moving average. Our other NYSE advanced decline line did decline just a little bit, and we're still above these moving averages. So we ticked down a little bit with the NYSE common stock. We were declining to flat with the S&P. We did decline with the mid caps, and the small caps are coming back down to their moving average. The daily chart, we're still looking fairly healthy here. We were seeing a series of higher highs and higher lows. Now we're chopping more or less sideways. But this is still continuing to support the idea that these higher prices are holding, at least for right now. We may be exhausted and we may be able to work off this situation by chopping sideways. But the fact that we're not really seeing any convicted selling is still positive for the market. On the bottom, we did pick up with volume, but we're still below average. We're still extreme with our 20-period exponential moving average. We're flat with the 50 and flat with the 200. The Stochk RSI is still extreme positive, and it can stay there for a long time. And the same thing can be said for the Williams percent R. It's still extreme positive. The CCI charts are still gone for right now. We're dropping below the midpoint with the force index. Now, this is another short-term indicator, and if price isn't really moving, this starts to get a little more sedated. And since we have been chopping more or less sideways with not a lot of action, that's why we're seeing this decline. However, it's still positive because we're green and above zero. But when we look at the stochastics on all the different time frames, we continue to be extreme positive, and we're starting to flatten out. We're coming down just a little bit with our third standard deviation area, but we're right at the top end of it. So this is still suggesting that we are overbought. The boom indicator is declining, but we're still above this 100 level. We're also coming down slightly with the 50 and the 200. Intermediate term, we're still declining with the balance of power after getting extreme positive. The CMB composite, and this will, unless we gyrate back up, I won't include that in the list anymore. We were up here for most of the month of November. Now we're finally starting to drop back down. But the go, no-go system is still positive with the darker blue bars. We're still at the upper end of the highest high value, even though we've been chopping sideways. The midpoint is still continuing to advance. The TTM squeeze, another potential warning sign where we're turning with this darker shade of blue and starting to decline. Longer term, we did get a really high reading, which at that time did mark a top. We don't know if that's really going to happen. This top was more fat, it was quicker. We came right up here and then started immediately to go down, where now we're pretty much chopping sideways. That's one little difference between these two signals. The rate of change based on 20 periods is declining, but is still extreme positive. We're also continuing to decline with the ease of movement. And we're flat now with the Arun indicator, but still positive. We are advancing with the summation index based on price, and we're starting to come a little bit above this downward sloping trend line based on volume. We're also advancing with the NYSE summation index based on price and volume. Here's another potential warning sign. The Swenlin trading oscillator is turning down based on price and volume. Momentum is still positive with the PMO going up. When we break it down and look at it based on price and volume, they continue to advance. We're no longer extreme with the PMOs that are rising, but we're still extreme with the buy signals. We're still positive with the PMOs that are above zero. We continue to be neutral with the Elder's Impulse system for the S&P. We continue to be positive with the parabolic SAR. The slope is now starting to come back down. And again, as I've been trying to point out here, this could mean, yeah, we're getting ready to see some weakness, or it could mean that the way this is calculated, the higher numbers are being calculated, and that's causing this line to roll over. The MACD rolling over just a little bit, but it's still positive. The longer-term MACD is looking more positive. We're above this moving average and starting to go a bit higher. That's longer-term positive. So when we look at all of our oscillators, we are coming down with the slope. That's our shortest and most touchiest oscillator. We're starting to get extreme with the TSI. That's another short-term oscillator. Rolling over just a little bit with the MACD. The PMO is still positive. Rolling over a bit with the PPO, but our longer-term oscillators continue to be positive. We could say that we're starting to get extreme with the KST. We're going above that blue line. The Sean trend meter declining a little bit, but is still above this red line. That's extreme positive. And we continue to be above all of the plotted moving averages in our moving average tree. The bullish percent index still continues to hang in there. It was down a little bit, but we're above 50 and for the most part have been advancing. We're breaking a little bit further above 50 with the NYSE bullish percent index. And we're chopping around right at this 70 level. 70 and above is extreme positive for the NASDAQ 100 bullish percent index, but we haven't generated an official overbought or sell signal at least yet. The Chaikin oscillator continues to decline, but it's still above zero. The money flow, after giving us an overbought signal, is pretty much flat in Tuesday's session. The ultimate oscillator, also an extreme positive reading, and is now starting to come down, but it's still positive. The vortex, we're seeing the green line continue to decline. The RSI, based on 14 periods, is no longer extreme. We are declining slightly with the 9-period RSI, but we have not dropped down below the extreme positive reading. On balance volume, still above an advancing moving average. We were up just a little bit with our 200-period moving average study for the stocks in the S&P, as well as our 50-period moving average study. The copy curve, this could be getting ready to go away. If we drop below the red line, this signal will no longer be generated as a buy signal. Longer term, we were also getting to kind of an extreme reading, which sometimes have marked a top in the market, but other times it just marked a slowdown. Pring bottom fisher, another day or so, and this one might go away as well. I just have the trend line studies to show here where this isn't exactly a real straight line, but we're just kind of flirting around with this previous high here. We haven't been able to decisively break above it, nor have we really broken below it, at least yet. Our different charts, we're still positive to a degree with our Heiken Ashi chart, where this is looking more like a doji. That's showing more indecisiveness. The fact that we went down, then went up, and then closed pretty much unchanged, that's just showing a real indecisive market right now. The Kegi chart, though, is still positive. The Renko chart is positive, and the three-line break chart is positive. We're watching the Zohorchak method because we've dropped down to this -6. If we see strength, we might eventually see this go back up. If we see more weakness, this could come down and generate a long-term sell signal. We ticked down just a little bit with the equal weight, where we held up just a little bit better with the S&P 500 weighted index, and we're chopping around with our ratio between the S&P and equal weight S&P. But longer term, this has been going up, meaning that the mega caps are outperforming the rest of the market. We were up with the Dow, down with the transports, not necessarily healthy, and we turned up just a little bit with the utilities. So when we look at the transports, we are underperforming the Dow, and the ratio is going up, meaning that the Dow is outperforming the transports, not what we want to see in a healthy environment. We continue to decline with our other ratio of the transports to S&P. We want to see this going up. It's continuing to go down. The Dow is still hanging in there, and this is a fairly healthy looking pattern that we see on the chart with a series of higher highs and higher lows. But the diamonds are still neutral with the Elder's Impulse system. The NASDAQ is still hanging out above this pivot level, so support continues to hold. And we're still above the 61.8% retracement level. That level, we haven't really tested that recently, but it's holding. And the NASDAQ 100 is still above this pivot level, and we're seeing a lot of sideways choppiness. But the Elder Impulse system for the QQQs remains neutral. But we're showing a little bit of weakness here with the PPO. This is the momentum for the NASDAQ 100. It's still positive, but it's rolling over just a little bit. And we're still chopping more or less sideways with the mid caps. We were down over 0.5%. We cannot seem to get above the 200-day simple moving average. When we look at the Russell 2000 small caps, we're still above 50, but declining with the RSI. We still have a longer-term negative trend. We've been chopping sideways with the small caps. However, in the shorter term, momentum continues to be positive. We continue to be neutral, though, when measured by the Elder's Impulse system for the small caps. The mid caps continue to be above their 200-day moving average, but they're chopping more or less sideways as well, and they continue to be neutral for the Elder's Impulse system. The financial sector, it was down slightly, but we still are above the 50 and 200-day moving averages and generating a new golden cross. We declined with this micro caps, but we're still above 100. The FANG index has now started to go sideways. It's still looking pretty positive when you look just at the price movement. We're above the 50-day moving average, and we're still in a longer-term uptrend. And we're still dealing with this resistance level. We can't seem to really get decisively above that and then close above this for the FANG index. The dollar was down slightly, but is still in a longer-term uptrend. We did see a decline with the 10-year yield, which means that based on price, the ETF for the 7 to 10-year bonds did go up. And this is still a concern. I thought it might be an anomaly of a holiday weekend, but we're seeing this continue to be more positive. When you take the 1-month yield and subtract the 3-month yield, we should always get a negative answer. Right now, we're at plus 0.06. Then updating some of our growth of value studies here, we're still hanging in there with the Qs to S&P, as well as discretionary turned up and is above the moving average. Large cap growth is turning up slightly when compared to large cap value. Our other growth to value ratios for the large caps, mid caps, and we turned down just a little bit, but we're still above the moving average with the small caps. We're still hanging out in an extreme positive area with our 10-day average of the S&P high minus the lows. Again, as I always point out here, this could mean that we're exhausted and due for a pullback, or this is suggesting good momentum. The market is resting right now before it's getting ready to go higher. We're still looking better on a broad market basis. We're above zero with our 5-period moving average of the highs minus the lows when we look across multiple indexes. We're still above zero with our 50-period moving average study of the new highs minus the lows, because the black line, the indicator, even though it's been declining, is still above zero. That's helping the red line to go up. And we're wondering if the 2-year Treasury yield, which has been coming down the last few days, is this spike and then decline going to give more support to the S&P? But we're not really seeing much right now with the S&P to utilities ratio. It would be helpful if this was really going up. We're just chopping around now. We want to see this going down, but the Staples to S&P 500 ratio is ticking back up, and it also ticked back up after Monday. However, in the longer term, it continues to decline. We're no longer extreme with the 19-day exponential moving average of the S&P advanced decline line based on price. We did decline a little bit here, but we're still looking fairly positive. We also declined after not being extreme based on volume. And then we just have a couple of days left, which on a seasonal basis, according to Tom Bowley's research, we should be positive. So what's our outlook for Monday? Still dealing with earnings as they are released, still looking at all the different geopolitical events. We're still positive, but we have an overbought condition right now. We're keeping the idea open. Is weakness starting to develop? We're not really seeing any weakness yet, but we're not really seeing any follow-through strength as the market is chopping more or less sideways. We will get the MBA mortgage applications index for the week. We're going to get the second estimate for GDP. That may not move the market all that much unless the reading comes out really different from the time we received it the first time. And not a real big report coming out with advanced retail and wholesale inventories, as well as international trade in goods. And then we're keeping an eye on the different geopolitical events, which could at any moment come in and have an impact on the market. We will be getting PCE prices on Thursday. That's a very important report. And we're going to get ISM manufacturing on Friday. For November 29th, we have positive seasonality from 2001 to 2021, where we're really more convincingly positive with the Dow, S&P, and NASDAQ. We will be on the 20th trading day of the month. There's still one more trading day to go, where we tend to see more positive seasonality with the green dashed line. Also, when we take all the years together with the solid green line, that is positive. And then I just wanted to include this because I do have the December chart here. There's really nothing to show yet. As we unfold the month of December, we'll be talking about each day as we go through them. And then I'm starting to include the latter part of November into December right now when we're looking at seasonality, where during a pre-election year, when the current president is running for re-election, we tend to hold up near the end of November into the early part of December, but we're not seeing that across the board here. Here's another seasonal chart from 1990 to 2022, where we're coming into the latter part of November, where this is kind of what's happening now. We've been chopping sideways before we tend to possibly see some weakness. But this seasonal chart from 1950 to 2022 is looking pretty good going forward, but there are times of weakness. And then when we compare an election year with non-election years, we tend to see more positive seasonality. Carson is suggesting that we could be in a period of weakness before we get into a stronger period going into the end of the year. Here's another new one. And I'm showing a lot of these charts because you can look at 10 different charts that are calculated in slightly different ways and come to 10 different conclusions. So that's why I want to present as many charts as I can find on seasonality. It's not that we use this to make decisions, but it is kind of a good guide. And when we see confirmation, then it's like, okay, well, historically, the market tends to go up or down during this time. So that makes it a little bit easier for me to make decisions. We are, according to Equity Clock, we do see some weakness right at the end of November before we see some strength. See, that's different than the Carson chart we're looking at. But then as we get into the early part of December, that's when we tend to see some weakness. Some of our other charts are not picking that up before we tend to see some more strength going into the end of the year. Here's the Stock Traders Almanac statistics. where we tend to see a little bit more strength going into the latter part of the latter part of November into the early part of December, which is different than other charts that we're seeing. And then we look at this other chart for the S&P 500. We also see some strength at the end of November and into December. So our scenarios, we can't go with the down one right now. We just don't have any evidence of that. Our charts, although we might be showing some weakness, they're not really following through. We're not seeing price actually confirming any kind of a weakness right now, but we are overbought. Okay, so you could play off of that, but it's like standing in front of a freight train. You could maybe slow it down a little bit, but you don't want to get in front of some real strong momentum there by taking a guess as to what will happen, especially when we don't have a lot of proof to suggest that. If anything, we're still going with the uptrend, even though it's been frustrating because we've been chopping more or less sideways, but price is still hanging in there. It's not really falling back yet. What we're definitely not going with right now are these sideways trend type strategies, because even though we've been chopping sideways, the ADX is still suggesting that we are in a trending environment. The warning signs, we're back to the equity put call ratio going up, both with the 5 period and the 253 period. Until we can see some more strength in the market and really bring this reading down, it's turning back to more negative. The risk on posture, it'd be nice if that would start to go up, but it's just not doing that. And we have the Russell, the small caps, and the mid caps, which continue to be in downtrends. Now we look at the positive signs. The daily special K chart is still positive. The weekly chart is negative. The momentum is still positive, but we're watching that slope oscillator because it's now rolling over and dropping below its moving average. The NASDAQ 100 momentum oscillator, it's showing some weakness, but it's still positive. The parabolic SAR chart and the vortex indicator are positive, but that green line on the vortex is still declining. The bullish percent index is above 50 and positive. That's pretty helpful right there. Small and mid-cap growth continue to be positive, even though they're chopping sideways. The financial sector is above both moving averages, so we have a golden cross. The new high, new low study is still positive. We're going a little bit further above zero now. So our conclusion, we're still positive but overbought, wondering if weakness is starting to develop. We can say that same thing in the short and intermediate term, where in the long term, we're watching the Zahorchak, and that's a long-term indicator. But for the most part, I measure this when we're above or below the 200-day simple moving average, and we are positive there. Thank you. I really hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.